Good evening, everyone. I'm happy that you're joining us tonight. We wanted to have this discussion in order to keep all our friends, our social network, and the people we know informed of what's going on at this point in time regarding the issues that you saw that we're going to be discussing about. So before we start, I wanted to do some introductions. As you know, I'm Andreas Batakis, and I'm a real estate professional with the Talos team. I have with me Morgan Vaughan, who is an independent licensed broker with Capital Lending Verico. Hi, Morgan.
How you doing?
And I also have Mike Clark, who is a barrister and solicitor and partner at Corman & Co. Good evening, Mike.
Hi, how are you?
Excellent, excellent, in very good form. So today, the conversation is not about us, right? It's about informing the audience and everybody that's watching what's going on with some very important subjects. So we're actually going to move throughout our conversation. We're going to move through 4 pillars. Pillar 1 is going to be talking about mortgage deferrals. The second pillar is going to be talking about the tenants protection that has been announced by the provincial government. The third pillar is going to be interest rates. And then the fourth one is going to be essential services relating to real estate. So I would like to start with Morgan. Morgan, can you give us an overview in layman terms? What is the mortgage referral that has been spoken so much about the past few days?
Yeah, for sure. I mean, the simplest way to define it is that anyone that's having financial issues right now because they're out of work, because of the quarantining, or because they're sick and they're going to not be able to make a regular mortgage payment, they can contact their bank to defer up to 6 months mortgage payments is basically what most lenders are doing. Now, I want to make it clear that a deferral doesn't mean they're letting you skip making a mortgage payment. What they're basically doing is taking whatever amount of payments you defer and they're adding them to the mortgage balance that you already owe. So once you start making regular payments again, your mortgage will be a little bit higher because those payments weren't made. But more importantly, they're adding the interest that you should have paid to the principal of the mortgage that you already owe. So you're paying interest a little bit on the money that you had deferred. Some people have the misconception that they get to skip their payment and just not make it up. And that's not how it works. It's a very valuable tool for a lot of people in this market today, because there are lots of people, unfortunately, that are in industries that are closed right now. They've been deemed non-essential services and they're not allowed to be open. And that's a big problem for a lot of people. So these programs, they're tools that can be taken advantage of if you need them. I can provide you with a list of all the different lenders, how to do it, who to call, who to email. But every bank has a separate way to do it, and most of it has to be done online. And you just put in the request and they get back to you, but they're overwhelmed, I know, right now with requests for this. So people do need to be patient. Don't wait to the day of your mortgage payment. Do it a week or 2 or 3 weeks in advance if you know you're going to have some hardship.
And just to make it absolutely clear, mortgage deferral is not mortgage forgiveness.
That's right.
I read a lot of things on social media, and there's a lot of confusion over that. Mortgage forgiveness is basically that you won't pay and they will just scrap that amount. This is not what's happening here. It comes with the price tag, like it actually has a cost to go for mortgage deferral, right?
In a sense, because they're adding it to the back end of the mortgage. So you'll pay a little bit of interest over the life of the mortgage with the payments added on. I mean, it's not going to be thousands of dollars, but it's still going to be a cost. But if the difference is bouncing your payment and getting behind or just adding it, it's a very valuable tool right now.
Okay. So let me ask you another thing that they even have articles published about it out there. So I want us to clarify this as well. Credit score. Is our credit score influenced when we choose to, take advantage of mortgage deferral because we have to?
That's a great question. And there was an article in a major paper yesterday, I believe. And if you read through all the information that's out there, most of it is just people's opinion. Equifax, who is the largest credit bureau in Canada, we have 2. We have Equifax and TransUnion, who we use. Their take on it and their expectation, I'm not going to read the full quote, but basically their expectation is that lenders will take action to ensure that it does not report any derogatory or missed payments on the credit bureaus of people who choose to do this. So that's a part of the whole quote that they put out. I would give, if you may, I'll take a quick minute just to go through 6 things that people really need to do if they're going to go through a deferred payment plan.
Yes,
and I'll do it fast.
Yes.
There's 6 things that I found that really should be considered. It was from a great article online. Always do the request either electronically or in writing.
Yes.
That way you have a record that you did it.
Yes.
Ask for the employee number or service rep's name that has confirmed your deferred payment and try to get the written confirmation back. Write down the day, time that you talked to the customer service rep, and make sure all supporting documentation that you've sent and that you've received, you're keeping somewhere safe that you can use for a later date if there's any errors. And very importantly, track both your credit bureaus. You can do this quite inexpensively or for free for at least 6 months after you've made the deferrals of payments, because these programs were rushed out to assist people because everything's changing daily in this environment of what's going on. So mistakes can happen. I mean, it's not something they've done intentionally, but banks are doing their best to help people, but mistakes can still happen. So watch your credit bureau, make sure that the mistake hasn't happened. And if you do see the error and you've taken the other 5 steps before this, you can contact your bank and say, look, I've noticed you've reported 2 missed payments. You deferred my payments. We need to fix this. And if you've done all the steps before that, you're going to be able to help fix things quickly. Changing things on credit bureaus can be very difficult, but if you have backup for everything, you're going to be able to do that. But more importantly, down the road, if you want to apply for some other kind of financing and there's missed mortgage payments, even if they're made by mistake, it can affect your ability to get credit for car loans or at least affordable or cheap rate credit, right? So those are 6 very valuable things people should really do. The bottom line is it shouldn't report, but things can happen when they're done on the fly, right?
Okay, great. Thank you very much for addressing that as well. Now, Mike, let's take the legal perspective on another very popular item of the past few days.
Sure.
The announcement of the provincial government that nobody's going to get evicted.
Yes. So it really is just that. The government has basically announced through Doug Ford that people don't have to worry about evictions for non-payment of rent. They have not said that you don't owe the rent. They have just said you won't get evicted. And practically speaking, the landlord-tenant board is shut down, so there's no hearings right now. And in order to evict a tenant, you need to have a hearing first. No hearing, no eviction. So this would not stop a landlord from potentially serving a tenant with notice of eviction for non-payment of rent, but they cannot actually get the tenant out. And I say that right now, but it's always possible that the government will enact some sort of legislation or regulation to deal with this situation later once they understand, the magnitude of the problem. So very basically, some advice for people who are tenants and advice for people who are landlords. If you are a tenant and you can pay your rent, you should pay your rent, because my expectation is that any unpaid rent will simply form a debt to the landlord that will have to be repaid later. So if you have the money, I'd say pay now. If you're a landlord and you're worried that your tenant cannot pay the rent, you need to speak to the tenant about how much they can pay and when they can pay. And I'll give you an example. I read an article today about a creative landlord who went to the tenant and asked for half of the money on April 1st. The landlord would then accept late payment for the other half of the money once the tenant started receiving either EI benefits or money from this new federal government initiative to pay parts of people's salaries, which I understand will be starting in another couple of weeks. So in that case, the landlord's okay because the landlord's still going to be able to pay their mortgage. They're still getting full rent. And the tenant's okay because they don't have to pay every last nickel in their bank account right now to the landlord. They can pay some now that's affordable, and then some later when they have more money in their pocket. So, right now, both parties, the landlords and the tenants, they do need to work together and be sensible about this. And landlords have to understand tenants may not have any money if they've lost their jobs, but the landlord is totally incapable of evicting that tenant. It cannot happen legally right now because you can't basically initiate the process. The process will not work for the landlord right now. As far as the landlord's mortgage goes, as Morgan was just saying, the banks will look at requests to defer mortgage payments on a case-by-case basis. So if the landlord has a legitimate case that they cannot afford their mortgage, then I would encourage them to speak to their lender to see if they can work something out.
Yeah.
So that's an interesting point, because now we can connect the two. Because as you both know, there are plenty of people, especially in Toronto, where they have actually purchased properties as investment in order to rent them out. So
that's right.
What happens with this scenario? And maybe Morgan, it's more to you as a question. Like, I am a landlord, let's say, for example, and I have a couple of tenants, and suddenly they happen to be in a truly difficult position and they can't pay my rent on April 1st. But I still have to pay my mortgage for this investment property. And obviously, I was counting on the cash flow I'm getting from it to pay the mortgage, and now I can't afford to pay the mortgage. Do I qualify as an investor, despite the fact that it's not my prime residence? Do I qualify for the mortgage deferral option?
Yeah, that's a great question. And this is something I think there's a lot of misinformation out there that I've been reading. There are banks that we deal with as brokers that have officially come out and said that you can qualify for deferrals on your own property and up to 4 rental properties that you might have mortgage with that same lender. So it's the same scenario. If you're not getting rent in and you can't make your mortgage payment, you're in financial distress. You need to get your mortgage deferred. Most lenders are going to look at this and allow it, assuming you either meet their criteria or whatever their application process is. But the deferral remains the same. It's added to the mortgage and you pay for it later, that sort of same thing. But lenders are saying they will look at it on rental properties as long as you meet the criteria to do so, right? And again, it has to be the matter that you can't make the payment, not so much that you don't want to make the payment, right?
Exactly.
I'd agree with that last thing. Basically, to boil it down, if you're a landlord and you're rich, the bank's going to take money from elsewhere.
Right.
Exactly. Okay, it's perfect that you've clarified that as well. And we're clarifying it. We may know this information, but it's great to put them out there for all our friends and audience now so that they know what's going on. And I want to remind to everyone that we're all in this together. One of the things that this pandemic has taught us all is that it doesn't care who we are. It doesn't care if we're tenants. It doesn't care if we're landlords. It doesn't care if we're rich or if we're poor. We're all in the same boat. So it's good, to our point, to try and work together. And I have to say, from my personal experience, from some clients I have and so on, I have seen that some property management companies, and I will give them credit, they actually were proactive about this. They've sent emails early last week to clients they have that are renting properties. They send emails to tenants and they said, I hope you're well and everything is okay and that none of you is actually affected. And if by any chance you have financial difficulties and you can't make your payment for April 1st, please let us know so we can come to an arrangement, which is a beautiful thing. It's actually human and proper. And as you both advise, like, as long as people are proactive and they take action in advance and they talk and we all talk with each other, we can find a solution.
That's right.
Okay. So the other pillar that I wanted us to touch upon is interest rates. Morgan, the last 2 weeks, we've seen the interest rates going up, going down. What is happening? And most importantly, I want to ask you, what's the impact to us, to our real life? How does it impact nowadays our mortgage payments and all other obligations and loans we have? What's going on now with interest rates?
Well, I mean, we've seen the Bank of Canada drop the interest rate quite a bit, like 1.5% in the last 3 weeks, I guess, which is just it's tremendous. A lot of people feel that rates should be super low now because of that. Now, people have to remember that the Bank of Canada rate affects the prime rate at banks, and banks in turn price their variable mortgages, which means the rates can go up and down with the prime rate. Now, 2 months ago, prime -1 was a great deal. And as prime started dropping, the banks start shrinking the discount off of variable mortgages. So today, probably the best rates you're going to find is maybe prime -0.1, and some lenders are even at prime plus now. So if prime is 2.45 and you take a deal at prime, you're still getting 2.45. It's very good. Someone who took a variable mortgage 6 months ago at prime -1, they're paying 1.45. But banks are still going to try to make sure that they're making money when they're lending money out to people, and they have to borrow money to lend money. That's the other, I think, misconception people sometimes have. So they can't lend it out below what their cost is, right? Now, on the fixed side of things, it's priced entirely different. It has nothing to do with the Bank of Canada rate, and a lot of people think that it does. Fixed mortgages are based off the bond market, and the bond market went to a very, very deep dive down to historic lows a few weeks ago when this really started in Canada, and they've gone back up again. Bond rates have gone up, but banks have a lot of things behind the scenes, liquidity and certain concerns that affect mortgage rates. And that's why rates are back up higher. It's still 3%. I mean, if you get a mortgage at 3%, this is what people feel. It's like, oh, 3 weeks ago, when I didn't need a mortgage, I could have got it at 2.3. Now I need it now, and it's 3 at the rate's so high. Well, the rate is what it is, and people need to sort of get that. But 3% is still historically low. Yes. And if you're borrowing money that cheap fixed for 5 years, you're in a very good position, especially since we don't know what's going to happen over the next 1 month, 6 months, 12 months. We don't know what's going to happen to the economy. I mean, the virus is going to get dealt with, but the economy is going to stick around in bad shape probably for a lot longer, I think, in certain types of industries and stuff. Right. So,
which brings us to our final pillar for tonight, and that is, all three of us are considered to be offering essential services, and there is a reason for that, right? Because we can't leave people without homes. In the midst of all this, there are people that, especially in the Toronto area, for example, or even outside Toronto, they actually had sold their homes before finding a new one. So now, despite the fact that there is an actual, a COVID-19 situation, they still need to find a new home. So we are here and offer that essential service, which is to actually help them find that new home. So the question I have for you two is, Mike, from a legal perspective, despite all this, are we okay to still do closings, have agreement signs, payments go through, and actually having people move into new homes when it's necessary during this period?
Oh yeah, like I can tell you that virtually all of my deals are still closing. It's a little bit more work to get them closed because everybody involved in the deal is having to change their normal processes. So banks have to change their processes. Lawyers have to change their processes. Certain ways of doing things have become impossible. So for example, I'm not allowed to have a family of 5 or 6 into my office to sign up mortgage paperwork or deal paperwork, right? So lawyers can now sign clients electronically over video chat, just like this, which was not permissible before. But still, you do have to keep in mind that some lenders will absolutely refuse to allow the client to be signed by video chat, and then we may be left with no options in that case. So if we can't do a physical face-to-face meeting, that can cause a problem. And then, but for the most part, I can tell you that just about every lender I've dealt with recently has been willing to make exceptions. Just about every lawyer I have dealt with recently has been willing to make exceptions. And when it comes to just dealing with banks to make payments and what have you, everything is still getting done. It is harder. You might not be able to go to your local branch to get a bank draft, for example, but there will be a branch open somewhere that you can still go to, possibly on reduced hours. There may be enormous lines at that branch, as we have discovered and some of our clients have discovered. So it just requires a little bit more planning, a little bit more discussion, but ultimately the deals are closing, people are able to move, and everything can happen. But again, everybody has to play nice. So everybody's got to get along and be willing to make certain concessions to the way things would normally be done in order for everybody to get what they want in the end. But as I said, it's happening.
And I do want to say this, like one of the things that, from my perspective as well as a real estate professional, because as you know, we're usually the first ones that the client turns to when they need to speak about something, because we have the longest relationship with them. And if something's wrong or it's more hassle than they expected, I highly appreciate that I'm working with people like you, Mike, and you, Morgan, and you've taken the moment that this hit the ground, both of you, individually as professionals and also through your companies as well. And just like my company as well, we all made the effort to make sure that we can work with things like wire transfer, make sure that we get the necessary permits pushing through. And that actually pays off because it makes, first of all, it makes us show real value to our clientele, the people that we help. And second of all, it makes their life easier, which is what we want here, right? Work together to get to the result. But Morgan, can people still get mortgages? Are lenders, banks still give out loans to people so they can get their houses? Because that's another question that has been out there on social media a lot.
No, it is a great question. And then the short answer is yes. I mean, much like Mike was saying with what he goes through on his end, we have deals that require appraisals, that sort of thing. Excuse me. And with sorry guys, lenders have made accommodations to appraisals by allowing appraisers to do desktop appraisals. To sorry, something went down the wrong way.
That's okay. That's okay. Take your time. Take your time. Take your time.
So appraisers now have mandates where they don't even have to go into the properties in a lot of cases, and that's made it a lot easier for us because now because a lot of people are fearful to have strangers coming through their house right now, right? So appraisers might visit the property externally and maybe take a couple pictures through the window or something like that. I had my first one appraisal I got back yesterday where the client actually took all the pictures of the inside of the house. The appraiser was outside. He directed the client what pictures he needed and where to go in the house. And then he put all those in his appraisal report. And the bank was totally fine with that. It's called a modified appraisal. And that's just one example of everyone working together to find ways for all the professionals involved to make these things work, right? And the same with Mike was saying about, how banks are dealing with closings and stuff. I see that too, because I know what their processes are. And every lender's been communicating with us from day one. This is what we're doing now. And the nice thing I've seen is that it's changed. What might have worked 2 weeks ago, as things got more clamped down, they've adjusted again and they've adjusted again. And that's going to continue. And that to me really, you see that in all levels of our government, you see that in businesses that are essential. And I think as a whole country, everyone's really recognizing what we need to keep doing to keep people going, right?
Mm-hmm. Excellent, excellent. And I will ask one last question to both of you, and you can decide who wants to go first. Sure. It is a bit of a touchy subject, and that is what happens when someone is selling a property, but there is a tenant in the actual property.
Okay, yeah, sure. I'll run with that first. So very basically, you have to look at your agreement of purchase and sale. Does the agreement of purchase and sale indicate that the buyer gets the property vacant? So nobody's going to be living in that property on closing, not the seller, not the tenant. If that is the case, and the tenant refuses to leave, then unfortunately, everybody has to work together to keep the deal together, because the standard form Ontario real estate contracts, those agreements of purchase and sale, they will be terminated automatically. The seller will be in breach of contract by failing to provide vacant possession. If, on the other hand, the agreement contemplates taking over the lease from the tenant, then there's no problem. The deal closes as normal. and the tenant will be allowed to stay, and the buyer, having expected to take the tenant, will just take the tenancy over as anticipated.
Okay. Morgan, did you want to add anything? Do you think that there is a complication there from the lender's perspective if a property is tenanted nowadays?
No, not from a lender standpoint particularly. I mean, if the deal still closes, the lender's going to close it. I mean, if they've financed the deal as an owner-occupied home, I mean, the person has every intention of moving into it to be their own. It might be delayed because of this process, so I don't think that's a concern. The only thing I would add really to what Mike said is that this is one of those examples where lines of communication are important. I mean, if I'm selling a home and I have a tenant and tenant is under the expectation he has to leave, just make sure you stay in touch with them. Don't just assume they're going to move out the day before the deal closes. I have a client now I was talking to you guys about offline here, and he's buying a condo that the tenant is moving out of, and he's going to live in it himself. And they've been in touch with the tenant the whole time, because I asked him today, we were talking about something else, and I was like, oh, have you guys clarified that the tenant's okay to leave and he's found a place and everything? And he actually laughed and he said, no, my agent called me the other day about that, and that was my concern. And it turns out the tenant actually wanted to leave early because he'd made arrangements. But the fact is, it was in the forefront of everybody's mind. Rather, you can't, assuming someone's going to do something and making sure they're going to are two completely different things. And Mike probably sees that better, more than you or I, for sure.
I'm sure.
Yeah, that's a lot. Yeah, I mean, I would add that most of the time it's just about making the deal. Like, if the tenant doesn't want to leave, most people are not trying to cause a problem. Most people want everybody to get along, but maybe there's some intervening factor that's affecting the tenant's ability to leave. Maybe they thought they could leave, but then when they went out and looked at the market, they can't find a place that is to their liking or in their budget, close enough to their work or what have you, to actually make the move worthwhile. And maybe they need a little bit more time. So that's just something everybody has to work out. And, I can't remember the last time that a deal was actually totally killed by a tenant who refused to leave. In virtually all circumstances, something was worked out in the end, whether it's the seller paying for the tenant's mover to help them financially to get out of the way, or whether it's the buyer agreeing to take the tenant temporarily, or moving the closing date by a few weeks to give the tenant a little bit more time to move out. There's lots and lots of options, but as everyone has said, you just have to keep the lines of communication open. Get talking to everybody, find out what's motivating people to do what they're doing, and then work around it.
I have to totally agree with both of you. And as you both know, like, having that communication and having the right attitude, like that it can be a win-win scenario for everybody involved. I found very many times in the past with Nectaria that when we step in and we say, what's the difficulty and how we can help, people are highly appreciative, and they say, oh, these people are actually interested about me as well. So, if when we can intervene and we have a good communication, everything gets resolved in the end, most of the time, at least.
Yeah.
Well, I know it's been a long working day for all of us, so I will say that it was a pleasure having this discussion. I hope our audience enjoyed it as well. And if there are any follow-up questions that they may have, I'll share them with you, gentlemen, and we can get back to them.
That's great. Thanks for having us on.
Yeah, thanks.
Thank you. Have a nice evening.
Thank you.
All right.
Stay safe.